So what a beautiful day to be a bear. What's going on, team? It's Rahi with Techbot Solutions. And finally, after 3 consecutive red days last week, I shared it with you guys all on YouTube, on my social media. I was having a rough patch, right? I came back today and we did pretty well. So let me go ahead and share this. $15,429.49. I left myself with my one lucky share, and just so you could see, I did not trade TQQQ today. I just have one share there, and I'm not touching that one as of right now. So what happened today and what caused the market to sell off? For those that are unaware, SQQQ goes up when the NASDAQ market goes down. Like a lot of you guys already know, Jerome Powell was testifying in front of Congress, and I hosted that free live stream. Part of it was really hard to watch. It's crazy to see how old and how not connected, I would say, with today's world some of these gentlemen and gentlewomen are, kind of like they're in their own world, right? So Jerome Powell, for his age, I have to say, is a complete G. He spoke at 10 a.m. Eastern time, 30 minutes after the market opened, and then he speaks tomorrow at 30 minutes after the market opens. I wanted to ask you guys, do you want me to host that free live stream? If so, I am going to ask you to get this video to over 2,000 likes. That's it. Subscribe to the channel, get this video to over 2,000 likes, and I would be more than happy to host this free live stream. And it was a lot of fun, right? One of the things that I wanted to talk about is one of the things that we were all looking out for, right? What was the expectation is, was he going to be dovish, meaning less aggressive, or hawkish, more aggressive? There wasn't anything that really stood out to me, but one thing that he continued to repeat is that, being completely honest, the congressmen and congresswomen were not even really asking him too many questions about our current inflation rate and about future interest rate hikes. They were pretty much trying to push their own agenda and have him agree with whatever it is that they were trying to. They're very good with, trying to, I would say, put together a question that is favorable for them and or their political party. I wish there was more questions about, are you going to continue to be as aggressive with future interest rate hikes than as expected, right? Just kind of like the Fed president from Atlanta said that he supports and is in favor of a lower interest rate hike. This would have really helped out the market. But one of the things that Jerome Powell said is that he commented on, the economic data that was released in January was not the best. It wasn't horrible, but it was not the best. And based off of that current expectation of February and what is reported in the month of February is anything close to that, then yeah, they will most likely have to be more aggressive with future interest rate hikes than aggressive. And that's where that selling pressure really began. We originally sold off even when the market, when that live stream was just about to start. And that was the crazy part because he wasn't even speaking yet, right? It was, I would say, just getting factored into the market. And this shows you, right? So when you're asking the question, well, why did the market even recover? Exactly, because the Fed president of Atlanta opened his mouth and he has no voting rights on interest rate hikes, yet he opened his mouth and shared his opinion that was completely insignificant to what actually is going to happen. And there is no question, at least in my opinion, right? There is no question that the Federal Reserve, based off of recent economic data, will have to be more aggressive with future interest rate hikes. The big question that a lot of people are paying attention to this week is the unemployment rate and then also the non-farm payrolls. How many jobs were created in the month of February? And did unemployment rate go up or unemployment rate go down? Let me explain to you. There's a weekly report. So this is a monthly report, the unemployment rate, right? There is a weekly report, initial claims and continuing claims. It's the number of people that are filing for unemployment. That is reported on a weekly basis. Again, this is not rocket science, right? So this is a weekly report. And every single week in the month of February, it came in lower than expected, meaning less people are filing for unemployment checks. So what does that tell you? If all of February, they continue week after week to report a lower than expected my goodness. Wow. I lost my train of thought for a little bit. But for all of February, there were less people that were filing for unemployment. It was the same thing that happened in the month of January. And that's what I think is going to get reported by the end of this week, right? When the unemployment rate is released, We have an expectation of 3.4% with the current rate at 3.4%. I think that unemployment stayed the same when I'm seeing every single week, even now, right? Even just last week, that's not even February. Every single week, less people are filing for unemployment. Well, why would they not file for unemployment anymore? Well, most likely because they got a job. Just like Jerome Powell said, right now there's 2 job openings for every 1 person that's looking for a job. In my opinion, 3.4% is way too low for an unemployment rate. And then you have Elizabeth Warren trying to point the finger to Jerome Powell and blame him. Okay, so you're just going to be okay with 2 million people losing their jobs? I mean, we were doing just fine when unemployment was at 4%. And let's be honest, with all the people that we know, do you really think that only 4% of the US population that's looking for a job shouldn't have one? I know we all know a couple of idiots, and we're even surprised that they're even employed. There is no question that the Federal Reserve, in my opinion, will be raising interest rates more than what is expected, so a 0.5% or higher. And in my opinion, there's no question that unemployment rate is going to come in lower than expected, which is only going to support the case of the Federal Reserve needing to be more aggressive. So if you're a bull, what is your best case scenario? The best case scenario is that if we get us close to 3.4% than what is expected, and that the non-farm payrolls are as close to 205,000 jobs being created. If it's any more or if it's any less, then again, be ready for a sell-off. If you thought today was a sell-off, once we break this support at the moving average, I think by Friday, we're going to be closer to that 290. And if we break below that 290, do you know what happens then, right? From 290, that was our previous support level. We can go on the 4-hour time frame, right? Our next support range is 260. Talk about making money shorting the market. Man, I am ready. I don't know about you guys. And again, the only people that freak out when a market sells off are those that did not prepare. So if there's any people in the comments section that is just like, you just want the market to crash. Yes, because I want to buy things for a better price. I want to buy things for a better deal. I'll make a little bit of money, just like I did today, on the way down, shorting the market, 15,000, right? I'd love to make 10, 15, 20,000 every single day as the market sells off. And then I'm just going to try to put myself in a better position for my long-term plays, because we all know markets eventually will recover, but the Federal Reserve still has to reduce their balance sheet. And the Federal Reserve, there's no question that inflation is super sticky right now, and the Federal Reserve is going to have to revert back to being more hawkish than being dovish, meaning more aggressive with future interest rate hikes. And again, this is something that he plans to talk about tomorrow in his Fed live stream, which will be 30 minutes after the market opens. I will be live streaming it for free for only the people that subscribe to this channel, and if you get this video to over 2,000 likes. I appreciate your time. Hope that earned a thumbs up. Please consider subscribing, and do not forget, again, we're running our biggest giveaway, and a way that you can earn up to 5,000 entries is just for signing up for Learn Plan Profit 2.0. You earn 5,000 entries for a chance to win the 2019 Nissan GTR or $50,000 cash. And right now we're running our biggest sale. It's a one-time payment, lifetime access, $150 off. The second link in the description down below, and you can watch me trade live as soon as tomorrow at market open. Remember, the Learn Plan Profit team is the only team that I work with on a closer basis. So if you like the way that I break things down, if you like to be able to see my entries, my exits, but most importantly, hear my thought process during our live session, then make sure you take time and you click that second link down below and automatically get entered for that GTR giveaway. So I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.